So in this video, we are going to discuss about throughput accounting. So we'll discuss first about what is the theory behind the throughput accounting. Then we'll look at the formulas for it, and then we'll move on to the problems. So this concept of throughput accounting was developed from another concept called as theory of constraints. This theory of constraints was created by a person called as Eli Goldratt, and he has discussed about this theory, the theory of constraints, in his novel called as The Goal. Okay, so the theory of constraint is actually an approach to production management and optimizing production performance. So it's not quite about like how to boost the sales or how to uh, what to say about variance analysis or something like that. Okay, it is a technique where we try to increase the productivity and the profitability of the company. So its key financial concept is to turn materials into sales as quickly as possible, thereby maximizing the net cash generated from sales. So this is its underlying premises, or the main concept here is to find out how to convert the raw materials into finished goods quickly and convert that say finished goods into sold units quickly and generate cash. Okay, so there are certain assumptions here. The assumption is like you have a viable market where the goods are demanded pretty well, and the only problem lies in your operations like production or warehousing, storing, distributing. There only the problem lies. Okay, so it is, and also it is a very short term oriented technique. So we are not trying to it's not a very strategy oriented technique where we try to boost the sales over a period of like 5 years and all. It is a very short term technique where we are trying to boost the income in a very short time period. So the theory assumes three key things. One is it assumes that only direct material is the variable thing. Okay, so usually we assume that direct material, direct labor, and direct expense are variable, but in throughput accounting, it assumes that direct material is the only thing which is variable. Okay, so here you do not get the concept of contribution and all. Okay, like marginal costing, you cannot get contribution, but what you get is something called as a throughput. Okay, so what is throughput is selling price per unit minus material cost per unit is throughput. Okay, so throughput is similar to contribution, but the difference between contribution and throughput is in contribution calculation you will also have direct labor and the direct expenses, that and all it's not there. Okay, so the assumption is variable cost is the only thing which is variable. Sorry, direct material is the only thing variable. All other direct labor or direct expenses are fixed cost. Okay, so they go under the heading called as fixed cost. So fixed cost is something like called as total factory cost or operating cost. Okay, so all the cost incurred in the company except for material cost is total factory cost. So the next one is inventory. Okay, so sorry, the second one is focus on bottleneck. So this technique tries to find out what is the key element which is preventing higher production or higher distribution or higher storage. Okay, or even sometimes higher sales. So whichever the bottleneck is, they try to first remove that bottleneck. Okay, so bottlenecks are like which is stopping, which is limiting your production or distribution or sales. Wherever it is limiting, we have to overcome that limiting factor. So the limiting factors in contribution, here it is called as bottleneck. Then you have inventory. So inventory is as per theory of constraints, okay, or throughput accounting, inventory is assumed to be a waste. Okay, storing inventory is totally a waste. So he says that inventory should not be stored at all because inventory is not at all an asset. Okay, because an asset means it has to be productive, but inventory is there is no productivity at all. So you just produce the item and you just store it. What is the productivity there? Your money is only locked up in the inventory. So actually try to throw away your inventory. Okay, try to reduce your inventory. So ideally he says minimize your inventory as much as possible. Okay, so here we have to discuss the concept like this. So the key concept here becomes throughput per bottleneck. So he says, so the concept says it's not only the throughput which is important. Okay, it is a throughput return per bottleneck. So get the throughput number. So you have worked out the throughput number from the above formula divided by the total bottleneck. So you will get the throughput per bottleneck. When we do a sum, it's quite easy to understand because now we are only discussing the theory. So you will only get a kind of a mixed, an abstract concept only you are getting. Okay, so when we do the problem, you will get the idea much more perfectly. So in the same way, total factory cost, which is the total cost except material cost, that also you have to work out in terms of the total factory cost per bottleneck. Okay, so take total factory cost from the previous formula divided by the total bottleneck. Okay, divided by total bottleneck, you will get a answer. So it is not necessarily hours, it can also be resource. Okay, resource. And finally, you have this concept called as TPAR. Okay, what is TPAR? TPAR is the throughput accounting ratio, or TPAR. This number is a very key number. This is a very key number here, because this number is based on which only we are going to take decisions. Okay, which product to produce, which product not to produce, like that and all. So how do we find out the TPAR? So it is throughput return per bottleneck. Okay, divided by total factory cost per bottleneck. So you take these two formulas and you divide them. Okay, so you will get an answer which is around 1. Okay, which is around 1 only, you will get the answer. If the answer is like more than 1, it is a profitable product. If it is less than 1, it is a loss making product. If it is equal to 1, it is neither a profitable or neither a loss making product. Okay, so that's about the TPAR ratio. Now let's look at the bottlenecks so that you will get an idea. So bottlenecks are things which are stopping, things which are like limiting your production, distribution, or sales. So what it can be? It can be a production resource such as time available, such as machine hours available, or labor hours available, like that. It can also be, the bottleneck would be the number of salesperson. Okay, because the higher the salesperson, you can increase the sales amount, but as you are having the lesser salesman, that can also reduce your sales. Sometimes the bottleneck can be the uncompetitive price. Okay, price can be higher, so that you have to reduce it. Sometimes delivering the goods on time, it can be due to distribution power or due to production power, or loading the products from the godown to the vehicle. That time, or that kind of time, could be the bottleneck. Product quality can be a bottleneck. Okay, and lack of reliable material supplies. Sometimes you have like very good machinery, very good sales force, everything you have well, but only thing is raw material suppliers are not there. So you can have to try to overcome that problem. Okay, so these are the concepts here, these are the bottlenecks here. So the removal of each and every bottleneck will help you to produce more items and make more sales and make more profit. Okay, so remove each and every problem, you will be like making more income. So next one is called as criticism of throughput accounting. What is the problem with this concept? See, the first problem with this concept is it concentrates on the short term. Okay, when a business has a fixed supply of resources. Okay, so it is a short term oriented technique. For example, assume that the total number of machine hours is the limiting factor or bottleneck. If you buy one more machine, this problem is solved. Okay, if number of sales representatives is a problem, add one more guy, the problem is solved. Okay, so it focuses on the problem, but you can easily solve them also. You can easily solve them, and also it is only short term technique. Assume that you do all these things and finally you have a better competitor. Okay, for example, you run a cab service. Okay, you run a cab service. So you do all these things and improve your productivity and everything you do. Finally Ola and Uber come with a better technology and they destroy you. Okay, they come with a better technology and finally they totally crush you. Then what is the use of this concept? Okay, when your strategy itself is wrong, then what is the use of focusing on the productivity? Okay, so strategy actually comes at the top, productivity comes at the lower end only. Okay, so the next one is, most businesses can't produce products only based on the short term. So you can't like produce a goods only on the short term basis, because you are creating an expectation on the customer end. You are creating a market for your product, so you can't focus on the short term. For example, you are launching a new product. Okay, new product launch will essentially will ensure that your profitability suffers. But you have to launch a new product, then only your old product sales will, when it goes down, your new product can help it to revive the sales. So you will suffer with some profitability issues. So throughput is not a idea to is not a long-term oriented idea. That is a problem with throughput. It is more difficult to apply throughput accounting concepts to the longer term when all costs are variable and vary with the volume of production and sales or another cost driver. Okay, so we can't use this technique for the long term, because in the long term the factors which are affecting are which are really the bottleneck, okay, can be quite different from the bottlenecks in the short term. Okay, so in the longer term the bottleneck could be technology or competitor. In the short term it could be machine and manpower. So look at the difference there. That seems to be the total problem here. The business should consider this long term view before rejecting a product with a lower TPAR. Okay, so even though a product has a lower TPAR of 1, okay, or less than 1, sometimes companies sell loss making goods also, so that in the overall run they will make profitability. For example, um, you take Google. Okay, you take Google. So Google gives free Gmail, right? So is it a profitable product? The answer is no. You're not paying 1 rupee also. So their entire income is a loss because of you. They make profit only when you are going to buy the product. Okay, of course 90% of people are not going to buy the product at all. Gmail, they're not going to buy it. So only 10% of people are going to buy. That means as per throughput accounting they say that shut down the 90% of operations. Okay, 90% of free, shut it down. But actually that does not work like that. Okay, it doesn't work like that. Okay, in the longer term an ABC approach might be more appropriate for measuring and controlling performance. Okay, so ABC would be a better choice, they say. ABC is a better choice because it assigns the costs really well, and we can focus where the costs are incurred, and we can have a idea like that. So these are the theoretical points which are important for an exam, okay, about throughput accounting. So now we'll move on to the problems. We'll start from the first problem. So this is the first problem here. It says Quertico manufactures 3 products XYZ. Product details are as follows. Sales price they have given. I think the sales price is for per product. Okay, per product. Material cost is per product. Direct labor per product. Weekly sales demand. Okay, they have given. Machine hours per unit they have given. And finally they say machine time is a bottleneck resource. Machine time is the problematic one. And maximum capacity is 3500 machine hours per week. So this is also weak. This is also weak. Okay. Operating costs including direct labor costs are 10,000 per week. Direct labor workers are not paid overtime and work a standard 40-hour week. Okay, so direct labor hours are not paid any overtime. Okay, and they have to work for 40 hours per week. So what he wants is determine the optimum production plan for Quertico and calculate the weekly profit that would arise from the plan. So first you have to tell which product is better using TPAR. Then you have to tell what is the optimum production plan. Thereafter you have to tell what would be the profitability because of that plan. So it is a little bit lengthy problem. So what I have done is I have got all the numbers which are all the format which is required, because it takes a lot of time to type them. So format I have, we can just like type the numbers and try to get the answer. Sales price is 3, 2, 2.5. Okay, so throughput is very simple. Sales minus material cost is throughput. Okay, if you want I'll put it here. Okay, that is going to be the throughput. So if you want, we'll bold it. So what we want is throughput per bottleneck. So throughput per machine hour we need. So this product takes 0.4 hours, 0.3 hours, 0.2 hours. So we got it by division. So if you want how we got this number is you have to get throughput divided by machine hours. If you do that, you will get the answer. We have to rank them. Ranking is higher the better. So rank number 1 is this, 2 is this, 3 is this. Okay. So, but if you see throughput wise, X is the number 1, but throughput per machine hour wise, it comes only in the rank 2, and Y and Z are almost equal. But if you see, Z is having a higher throughput per hour. Okay, because even though it produces 1.2 throughput per unit, it charges only, it takes only 0.2 hours to produce it. Okay, so thereby we are getting a higher rank. Okay, this one, even though it produces the same 1.2, it takes more time in the machine, so that's why it goes to a lower rank. Okay, so now we have to type and find out how many products we could produce. Okay, so totally how much hours we have? We have 3500 hours. We have 3500 hours. Okay, we have 3500 hours. So monthly sales demand for each product is, sorry, weekly, I think it's weekly. Five thousand. Okay, so how much hours is required? So hours required is per unit. We can get it from here. So total hours required we will find out. So total hours required is multiplication only. It's very simple. Multiply this with this. Okay, so the total which is available, is 4000. Sorry, required is 4500 hours. Of course, we don't have that many hours. We have only 3500. So we have to allocate it as per the rank. Okay, we have to allocate it as per the rank. So we'll start. So we have to allocate it from Z. So Z, if you see, it requires how many hours? It requires hours to be allocated. Totally 1000 hours we can allocate. So this is our primary numbers. This is our main numbers. 1000. How much hours is balance left? 3500 hours only it is left. Okay. So out of 1000, this many hours is left. How many units could you produce? See, you can produce all the units. Okay, you can produce all of the units. That won't be a problem at all. Done. Next one is we have to produce X. Do we have 2000 hours? Answer is yes. So 2000 hours we can allocate, and it will take around, we can produce 5000 products with that. So because of this, the total availability of hours will become 1500. So if you want, I'll put it in the brackets here. 4500 minus 1000. So here it is going to be 3500 minus 2000. Okay. So balance how much we have. Finally, we can produce Y. But to produce Y, we need we have to use 3500. The available is 3500 only. So only 25000 hours is available here. And here again 500 hours is available. And finally 500 hours we can totally allocate it to 500 hours we can totally allocate it to y. You can fully give it to y. So y, if you take maximum, how much you can give is the total itself is 500 hours only, but how many you can produce? Okay, each product takes 0.3 hours, right? You have only 500 hours. Each product will take 0.3 hours. So how much you can produce? That would be the answer. You can produce 1667 units. Okay, we'll round it off to like this. So how many units you can actually produce? This one, 5000 here and 5000 here. Okay, optimum production plan would be units would be 5000 okay. So this is the units they can produce. And what would be the profitability? Okay, what would be the profitability? That we'll work out here. Optimum production profitability. Okay, so that would be like quite simple. We can just multiply the numbers with these and we can get the answer easily. So what we'll do is we'll just copy the table. If you see, this is per unit, this is per unit. Okay, both have been deducted and we got throughput. So why should we need this and all? We'll remove them. Okay, we remove them. So if we have throughput per unit, that is more than enough. So done. We don't need to have this, that and all. So throughput per unit is this. Optimum production units is this. Okay, and total throughput. Okay, so we'll find out what's the total throughput. Total throughput is very simple. You sell 5000 units and 1.7 is the profitability. So this is the and find out one total column. Okay, so this is the total profitability. So total throughput. Let's deduct the fixed cost. So let's see what's the fixed cost. Operating cost includes the direct labor of 10,000 per week. So that is the operating cost. So operating cost is something like fixed cost. So we have to deduct that from the total. So if you deduct that, you will get the profitability. So hope you got the idea here. So profitability wise, this is our overall profitability. So we'll summarize the answer and you can have an idea about it. So see, all these numbers are in per unit only. Okay, you have to be very clear about it. The question has not given it properly. Okay, in this question it has not given properly, but they represent per unit only. Sales price per unit, material cost per unit. Okay, direct labor cost per unit. Okay, they have given it. So machine hours also is per unit. So all these are per unit. And first the step is to get the throughput. As it's a throughput problem, you have to get throughput per unit. Sales minus sales price per unit minus cost, material cost per unit, you'll get the throughput per unit. That's what we did here. Then we have to get the machine hours. Why? We have to get a number called as throughput per machine hour. So divide the throughput per unit divided by through machine hours per unit. You will arrive at this number. Rank it 1, 2, 3 like that. Rank it. Once you rank, then you have to go for optimum production plan. So if you want, we could put okay, machine hours allocation I put. You can also put like this, optimum production plan you can put. So the total hours available is 3500, that is given in the question. Weekly demand we have got it from here. Hours required per unit, that also we have got it from here. What hours? It is the machine hours. Okay, so be very careful. Sometimes question will give you different hours. One is machine hour, labor hour and all they'll give. So total hours, that is for each product we got. Totally we require 4500 hours, but available is itself is only 3500 hours. So we have to produce as per the rank only. Okay, we can't produce everything. So if you produce as per rank, first one is Z you produce. Balance hours is 2500 hours. You can produce all of Z. Still you have 2500 hours you have. With that you can produce X for 2000 hours. So balance is 500 hours is left. Okay. In the 2000 hours you can produce all the 500. The third one is Y. Y you need to have 1500 hours, but you have only 500. So produce up to 500 hours. Okay. How many units you could produce? In 500 hours, each product will take 0.3 hour units. So you can totally produce only 1666 units. Okay. So the optimum production plan is these units. Take those numbers and put it here and multiply it by the throughput per unit, because it is shortening the problem. Or else if you apply it to, you multiply sales into units, sales into material cost, then find out throughput. It is a long step. It is a long way. The shorter one is this one. Okay, find out the total throughput, then get the full total of all the products, reduce the operating cost, and then you get the profitability. So that's about this sum. We'll move on to the next one. So all problems are very similar to this template and approach. The only thing is you have to read the question carefully and answer them. Okay.